Is this issue of inflation going to be something that these central bankers have to worry even more about in the coming months?
Well, inflation has certainly been a stubborn problem. We don't anticipate that it will go away in the next week or two, certainly. So it will be around for a while. We do believe it's transitory ultimately. And part of that is, again, we've had this massive cycle created by COVID. It's created a lot of imbalances in supply and demand. Some of that's come from a changing mix of consumption. Some of it's come from changing labor patterns. So we think we're in problem solving mode here. I think you said holding pattern, and I agree with that. We're in a bit of a holding pattern as we work through some of these problems. As the news said earlier that you just reported on, the shift at the Port of LA is one small example of how some of these problems are being solved one at a time. So I think we'll work our way through it, but it's not going to be quick.
Robert, I wonder, though, I mean, we have a number of these headlines developing. This is obviously a fluid situation. Do you make changes from an investment policy or strategy standpoint because of this? I mean, I guess what I'm trying to imply is, or ask, what exactly is the timeline for when these inflationary pressures due to supply chain issues start to ease? Should you be making your investment strategy decisions based upon something that might resolve itself in, say, the next few months, hypothetically speaking?
That's right. It's a fantastic question. I think timing is the critical element here. Timing has been very unpredictable all throughout this COVID cycle. My base case view is that we will be in this choppy period for a while. We've had a textbook rally in terms of interest rates going up and the sectors that have been leading the way the past few months. However, we've seen that reverse itself very quickly whenever problems have started to retreat a bit. And so my view is that these next weeks into year end are going to be choppy. They're still going to be led by the cyclical side. But I think as you get towards the end of the year, the outlook will take a little longer term horizon, a look towards 2022 earnings. And there you have to look at where are the tailwinds for growth rather than just where are the problems.
All right. So speaking of that earnings story, we've got a big week kicking off. The banks kind of start things off today. We got the airlines in the mix as well. What exactly are the expectations that you have versus what the consensus you feel is with this earnings season, and whether or not it could be a catalyst to break this market out of this kind of sideways-ish action that we've seen for the last few weeks?
Right. It's a great point. And I think, in my view, that the catalyst is more likely to come from the outlook rather than the earnings themselves. I think we've got a setup here where any kind of excuse can be offered for a miss. There's certainly been no shortage of problems or issues going on throughout the economy, whether it's labor or supply chain or logistics issues. And so I think some of those easy excuses may come in if earnings are a bit light. But I'll be looking to guidance, outlook for next year, not so much this quarter, but what's the outlook for all of 2022. And there, I think we'll start to see some bright spots. And as some of these problems are solved, I think valuations might actually regain a bit higher ground as well.
All right, before we let you go, just a couple of seconds here. You got a favorite sector out there, a favorite industry?
Well, I think for now, the coming weeks, it still remains the cyclical side. But I think I wouldn't overstay the welcome there. I'd start to get a bit more balanced. I think consumer discretionary will do well next year as employers add jobs back. And I think technology still remains a heart of every portfolio as every company out there is looking to solve productivity issues.